Welcome, the last episode before Christmas.
It's yes.
Thursday afternoon.
Are you looking forward to Christmas?
Sorry?
Are you looking forward to Christmas?
I think it's amazing. Last week we announced that we would have a yearly overview, but we will do it in another way than I think what you see normally in the newspapers, on the radio, on the television, etc. Next week we're gonna look back on our 51 vlogs that we made so far, because we make them every week. And then we're going to highlight the things where we were completely wrong, and the things where we were a little bit less wrong, and the things where we were
right.
And we don't give advice, but we're going to look back on those things. Today we do it in a different way. We looked at our offering. We offer 50,000 different shares, and we looked from those shares what were the best and the worst performance this year. And you see in the list normally, they look at the Russell 2000 or the S&P 500 or the European stock, and then you see, Nvidia, Meta, so that's, I think it's not that interesting. This is a little bit more interesting. On the other hand, I think we have a conclusion that's, it's more about the conclusion than about the facts that we're going to give.
Absolutely.
And one thing before we start, we start with the three worst performance, and then we close off. So you can forward it, but you have to look at the last part, because that's the most important.
Those are the winners.
And that it's again for us an eye-opener again, and probably not for you, is that if you
we didn't make a distinction here. We didn't choose between large cap or big stocks, small stuff. Just risers and
there are some big and small companies in it. But the interesting thing I wanted to say is that you see again, you can lose if you invest. You can lose 100%, but you can gain more than 100%.
Exactly.
We start with the worst performer of this year, Martin.
Yes, and it's actually closer to us than it's not in America this time. It's in France, and it's a company called Farnext SA. And what are they doing? They are a medicine, so the pharmaceutical producer of a medicine. And those poor people that work there, I think they had a good idea, good effort, but unfortunately, they had a medicine against the Charcot disease, which of course is a terrible disease. And when they did the trials, the testing, of course they used the medicine and they used a placebo. Well, what was the case? That the placebo was actually working better than...
No, it was same, I think.
Was this,
the
effects of the placebo were slightly better. The side effects maybe, or anything. People, so unfortunately, the stock, as they have a listing on the French stock market, they have to present those figures. And the investors did not like that, of course, because there's no point in investing in a company where you produce something that is not functional. So the stock price went down on the 11th of December with almost 60% during the hours, and even for the hours 82%. So it's hammered, and at this moment it's trading at 0.003 euros, which is zero. No?
And percentage-wise, how much did it go down?
99.9%. So
we laugh, but it's
terrible.
There are no winners in this, of course. But you also see before that the share price went already down. It was the last. The investors were already not a lot. They were not convinced.
If you look in November, the price was at 1 cent. So it went from 1 cent. And you will be surprised. Not clients of us, I think, because if we're going to look in our database, there's not going to be a lot of clients that have Farnext, but there are people buying that. It's only costing me 1 cent, so I'll buy 1 million of those.
Gambling.
But it happens.
Most of the time you lose with gambling.
You lose.
Orpea is also a French company that has a loss of 96%, and we, from the gainers and the losers, we take two out. We think that was more interesting, and the best of the
the three
that had a loss of 95%. Again, sorry I didn't say, but there were also companies who were delisted because they were bankrupt, of course. So we didn't took them in consideration.
So on.
So there was SAS AB, and that's a Scandinavian carrier. It's made, I think, only or mostly through the air with the planes.
Yeah.
And they announced on the 4th of October a big restructure and rescue plan because it was already performing very bad. And if you look at the price yearly to date, the share price, it went down, but not that much. But the biggest jump was on the 4th of October. And yeah, there is a plan, and it's still on the market. And if you look on the outlook, for example, Yahoo Finance for next year and the year after, they even estimate higher revenues than this year. So there is, it's not over yet, but I think it's almost over yet for all these shareholders. And I don't know how many new shareholders. I don't know the rescue plan. I don't know how many shares. Maybe they went from like 100 shares to 10 million shares. So one share is worth nothing anymore. I don't know that. But one share, it's worth almost nothing. It's 95% down, unfortunately. And I think the last thing I wanted to say is that still in the books, 56 billion of assets and 50 of debt, and that was before the last official figures. So this will be probably look a little bit different, and that's also, of course, a sign already. If you only have 10% margin between your debt and your assets, is of course a high risk. And then, of course, we're not going to talk in detail about those. What are the assets and what are the debts, of course.
Correct.
Then were the losers. AMC, what was an unpopular stock 2 years ago, it's a meme stock. It's number 4. It went down with 88%, and it went to the top winners.
Then we're going to talk about winners, and we like winners. And the third, number 3, bronze in this case, was for CleanSpark. We're not going to talk about CleanSpark, but the second one we are going to highlight. CleanSpark went up at 449% this year, so nice performance. The second one was Marathon Digital Holdings, had a price increase of 465%. And please do not mix it up with Marathon Oil, because that's of course a completely different company. It's a much larger company, I believe. Marathon Digital Holdings is a company that is active in the crypto space. They mine, so mainly on the production side of Bitcoins, the mining activity in this side. They came to the stock market in 2011, are still, since the introduction, 96% up. So they were down initially, and then they had a boost this year of 465%, mainly because of the fact that they're doing pretty well with takeovers. So they're taking over competitors, and that's something they can be proud of, because you see that there's of course a lot of turbulence going on in this sector of the crypto space with Binance and the Friedman story and all lots of whatever. So there's a lot of issues. Looking at the price chart, the stock at the moment is trading at $22, and in the summer it was around 20. So you see it's slightly higher. It went down to 10. So you see also here how volatile a company as this can be. Are we actually looking a little bit wider? So we look 5 years. You see that the stock was already trading at 70 in 2021. So it's not at the highest level. Even though it went up 465%, it's still far below the highest price where it was 2 years ago. So yeah, if you believe in this, maybe nice to have an investigation. It's a different company. I don't think a lot of clients pop up or investors think about Marathon Digital Holdings when you talk about stocks, but it was the second best performing stock of 2023.
And the best one, it scored percentage-wise 1,232%.
That's a lot.
That's a lot. I hope you had it in your portfolio by the beginning of this year. I hope you didn't have it in your portfolio for 2.5 years.
No,
I'll explain that a little bit later. So this went up with 1,233%, 32%. Sorry. It's trading at $55. It was at the beginning of the year around $5, and it's an online platform for second-hand cars in the US.
Mm-hmm.
I think there's the name coming from Carvana. Carvana. Yeah, I don't know. I think they play a little bit with it.
Yeah, I think so.
So they had good news this year a couple of times, and then you saw the stock jumping up. $55 it's trading now, and again the same as what Martin just mentioned with his stock is that if you look back at its stock, it was the highest point was in Q3 2021. It was $350. So if you bought it back then for $350 and it's now trading at $55, you still have a big loss. And I think that if you had it in the beginning of this year and for the whole year of 2022, I think that Carvana was in the list of one of the worst performers. So coming from one of the worst performers, and I don't say that now look at the worst performance because the year after there will be the big performance. No, please don't interpret it like that. All I want to say is don't get yourself fooled about this kind of figures.
No.
You see in the newspapers and on CNBC and on radio stations and podcasts, the best, this, and then what we said before, mainly the S&P 500, and then you think, and some people think, okay, when it's going bad, it will survive. It's also not a guarantee, but also if it's high, you should sell because it can go on. But you should focus on your own strategy. This is nice to know. It is. I even would say it's funny to talk about, but please be careful because if you look at those 3 top performers, they all had really bad years. They were worse than the good year this.
Yeah, definitely.
This company, for example, has 7 billion of assets. So it's not a small company, but 6 billion of debt. There's also what we saw before with SAS. It's only a little bit of margin.
Yeah, very small.
All those companies really volatile. They all don't make positive earnings per share.
No.
So high risk. Of course, you can always look within your portfolio for a small percentage where you want to be a little bit more aggressive with. Look at it from that perspective, but not from a fundamental perspective.
No, be careful.
It's nice to know, and I think it's also you as an investor. Again, it's nice to know you can lose 100% in the worst case, but you can gain, in this case, 100%. That's why we invest. I think that gives us the upward potential.
Yeah, exactly.
I think, Martin, you want to close off with
if you don't like to do stock picking, you can also look at mutual funds, because we have recently introduced mutual funds in our universe. We have over, how many mutual funds do we have? I think 5,000.
Yeah, something like that.
And the nice thing is we offer the clean version, so it's not the version where, and this guy is the seller, or the distributor, as it is called better, like us is getting a kickback fee. So you only pay a fee to buy them, and then of course there is a management fee, but those fees are much lower than if you would buy the dirty version of the fund. And if you look at the performance, I mean, the best performing mutual fund in this year was the Morgan Stanley, so you're buying from a big bank. The Global Opportunity Z fund had a performance of 49%, and the second best performer was Janus Henderson Horizon Fund. And the nice thing about these funds is, of course, you pay a little bit of a fee, but the management is done for you by professionals. So always good to have a look at those.
Much less risk because you buy a basket.
Yeah, you buy a basket, and we have really nice tools to filter out, if you believe in a certain sector, what is the best funds to buy. Of course, you see now we do that filtering. Yeah, technology.
US
is and the US is what's popping out, but definitely worthwhile having a look at.
Yeah, and we talked a lot about ETFs, and we have them since the beginning on our platform. And I think there are some advantages and disadvantages from ETFs compared to mutual funds, because you have some really well-performing mutual funds and a really good fund manager. Not all, and ETFs normally follow the underlying value.
You have to look in how. This week I had a client on the phone. We talked about what is the criteria, how long is the fund manager dealing with the fund, the size. There's a lot of things that you need to take in consideration, but definitely interesting stuff. Merry Christmas, and see you next week.
Give us your thumb and see you next week. Thank you for watching.